for the sale of a business. Now, does the business have to be in Puerto Rico in order for that to happen? Or can it be like I own Morales Group Enterprises, I moved to Puerto Rico, I'm a resident, I live there with my family, and then if I sell it, then it's 0% capital gains?
Correct. Yes.
Yeah.
Now, there could be some rules around depending on when you own certain assets, right? So let's say you move there today with that. Well, you'll need to get a price study based on what the valuation might be today, right? So let's say it's 10 million. So this way, when you go to sell it there, if you sell it for 50 million, then you know that the 10 million would be paid to the US federal rate and that 40 might be paid under your Puerto Rico tax decree rate.
If I own a business or if I'm buying or selling crypto, would that apply for the 0% capital gains almost if I'm buying and selling cryptos?
Correct. And that's obviously why probably the last 4 years or so, we've seen insurgence of, people moving there with the Brock Pierce hitting the news.
Hi, everybody. Jose Luis Morales here. Welcome back. Today we have Joe Robert, no S. So Robert, today he is going to be educating us on some of the tax havens that Puerto Rico has, some of the tax benefits, and he's going to be going over like why so many people are considering or are actually moving to Puerto Rico. And Joe actually lived there several years back. So if there's somebody to kind of explain that to us in detail, that's Joe. Welcome to the show, Joe. How are you?
I'm doing, man. I'm doing great. I appreciate having me on today.
Yeah, likewise as well, too. Good. So for our viewers who don't know who you are, who is Joe Robert and how did you get involved in this wonderful world of real estate and maybe a little bit of crypto as well, too? And then we can transition to how Puerto Rico kind of plays into all of this as well, too.
Yeah, to make it short and sweet for the listeners here. In high school, I did contracting work, got out of high school. Followed that passion, and basically that led me to buy my first property at the age 19, which led me into real estate. I lived and fixed that property up, sold after the 2-year mark for that tax break, since we're on taxes today, right? Just important. You live in that primary residence for over 2 years. And that led me to investing in more real estate along the way in the 2000s. We had the real estate crash, kind of reset everything for a lot of different investors at that point. And I continue to do that contracting work. And then at another point, I started fixing properties up and reselling them in the Philadelphia area. And this puts me probably in about 2011. One of my private lenders had decided he was going to move some of the money from my deals over to another area called distressed mortgages to another company. And so that interests me, and I started going to the meetings. And so me and a couple people partnered up to start buying these distressed mortgages as another way to invest in real estate. And then, fast forward a couple of years, we have our company running and buying and selling these loans. And over the years, growing up in Northeast in the Philadelphia area, it's a little bit colder, right? Especially in the winter. And I feel like the older we get, the more we want like that perfect temperature. Do you agree?
Yeah. Well, that's one of the people ask me all the time, why are you still in California? I'm like, dude, the weather here is amazing. Like literally 75 to maybe 90. Like 90 is like a really hot day. 75 is like very normal down here. So it's like, it's perfect.
So that led me to thinking like, hey, maybe I want to move down the office down to Florida or something at some point. And I was at a conference with one of my securities lawyers. And at that point, Obama was talking about cracking down these offshore jurisdictions and a lot of that. And so I just said, is any of this legitimate? Any of these offshore tax havens, like, is it legitimate? Is it legal? He's like, yes, but typically to get the full benefit, you have to be a full-time resident and actually live there. And he's like, I heard something about Puerto Rico, but I'm not familiar with it. So obviously, like most of us, I went home, I Googled it, right?
Right.
And I talked to some friends and kind of weighed the pros and cons. And then a few months later, I, got on a plane, went down there and booked myself an apartment to move down.
That's awesome, man. Congratulations. And for some of the people that don't know, like, what are some of the basic tax exemptions or why it's considered a tax haven, can you kind of walk us through like that almost like decision of becoming a full-time resident in Puerto Rico? Because I mean, in order for somebody like, and I'm seeing this a lot more often, like I'm seeing it with like a lot of large influencers. Like I know the Paul brothers, like Logan Paul and Jake Paul.
Can we talk about Puerto Rico a little bit? I'm moving to Puerto Rico.
I don't know if they still live out there, but I know for some time they were out there. And I'm kind of seeing it with people that are making a lot of money, like moving out there for tax purposes. So can you kind of walk us through that?
Yeah. And like we, kind of said pre-show, a lot of this is subject to everyone's different situation, and things kind of change with the law every year too with what they're doing. So always check with legal for best representation. But at the start, while we went there, and how the program works is basically, as a resident, you could apply for a tax decree, and there's a fee, annual fee, and fees for that. But that gives you a 0% on capital gains tax, right? And you could also apply. The other side of that is a 4% corporate tax rate for services outside the island. So what prompted us to go down there was, investment in our mortgages, right? We had those investments and we bought them at a great price, and we knew eventually we were going to want to exit that. And, we went somewhere favorable that would also benefit, that exit ultimately, whether it was Florida or Puerto Rico. And not knowing much about Puerto Rico, we thought it'd be a great opportunity in life to head on down and see what it's all about.
And you were like, because I've been hearing more and more about this, and it's almost like the Paul brothers almost like made it a little bit more like aware. But you moved down there when?
It was September 2014.
That's crazy. So that's like almost like 8 years ago, basically, So you were out there before it started becoming, and not only that, but with my company, it's a EXP, and they share revenue with the people who help the company grow. There's several of the very early people that are making maybe like $14 million a year that are now in Puerto Rico, basically. And I haven't looked into that yet, but that's why I was excited for you to come on here. So just to clarify, and I know that you're not an accountant, I know that people need to check with that. Does that mean like if I own like an apartment building and I move off to Puerto Rico, I become a resident, that I could sell that apartment and not pay any federal capital gains? Is that kind of like the basis of it, or am I taking
Yes,
it?
the basis is somewhat that, except the U.S. tax, federal taxes, some taxes real estate in this jurisdiction here. So that would not apply to real estate. Where you might be able to get some tax break is having some type of the people that are doing the management of those properties located in Puerto Rico, and they're providing services back to the U.S. for managing those properties. And that's where you probably could source some income back there and reduce your tax, your tax burden there.
So basically, like if your management company is basically in Puerto Rico, they will get the benefit, but you can still potentially be an owner in that management company if you wanted to, but then you'd have to be a full-time resident in Puerto Rico, basically.
Correct. So for real estate, it's probably not the best thing. It's probably one of the worst, maybe, I guess, depends on how you structure things. But definitely for stocks, crypto, the sale of a company, maybe, we're talking, the Logan Paul, right? These guys all have operating businesses with a lot of operating income that is derived pretty much from locations outside of Puerto Rico, right?
Mm-hmm.
And therefore, while residing there, they provide services back to the state for those companies, and then they could source that capital back down to Puerto Rico and pay that effective 4% tax rate.
So it's almost like and this is kind of something that I've heard before, and I don't know if this is how the Paul brothers do it, but this is kind of what I've heard. I've heard that somebody owns a business potentially in the U.S. They have a management company in Puerto Rico. The management company charges a consulting fee. You're the person, the owner of the management company. You live in Puerto Rico. X company makes $100 million worth of profit. X company charges $100 million worth of consulting fees. And then there's basically zero money made by here. And then there's $100 million made by the consulting fee, but the consulting fee or the consulting company is in Puerto Rico. Something along those lines is kind of the way I've kind of had it explained to me. Not to that extreme, but.
Okay. So I was, just to add on to that, and it depends again in each scenario and your accountant, right? Because there's definitely a lot of different accountants down there. Will give you even different ways to do it and different stories. But so let's say one might be like, okay, out of that 100 million though, if that person was stateside providing those services for 90 days out of the year, right? Then maybe a quarter of the money would reside back stateside. So they can only charge 75 million back. Does that make sense?
Mm-hmm. Yeah.
So
almost
I like to
prorated based on the amount of time that you're living out there, basically.
Correct. So there's some different factors there, right? So if you put your efforts into that while you're stateside or in some capacity, then technically that shouldn't be allowed to come back down to Puerto Rico because you weren't residing in Puerto Rico when providing those services. Now, I would say to add to that, like I like to say is typically you might pay an effective 0 to 10% tax rate, right? And so 0% on the capital gains, but on that business, like I say that 4 to 10 because it depends. Some people might have a little bit more higher allocation to the US federal versus the Puerto Rico federal government with their tax decree, depending on how the accountant sets things up and how that income's sourced.
So it basically, it for us talking about this, it's almost like look into this with your accountant, get more information. But these are some of the basics, and there's some people that actually specialize in these kind of taxes. Now, this is kind of what I've heard because I know the Logan Paul brothers, and I keep bringing them up, but they come back and forth from the U.S. to Puerto Rico from time to time. And I've heard that there's a certain amount of time that you have to be in Puerto Rico for the year in order for it to be considered your primary residence. Would you happen to know any of the requirements in order for Puerto Rico? Because I mean, some people may say, well, look, I don't want to live in Puerto Rico forever. I still have family in the US, but could I live in there 50% of the time, 60% of the time, and then the other percentage of the time come out, visit family, or what would that need to look like as well too?
Yeah, I mean, there's the tests. It's 183 days or more, which is that
Mhm.
51%, right? But also, as Puerto Rico and even U.S. are looking at this. They're looking at where's your primary residence, where's your family, where's your kids, where they go to school, where are their doctors at, where you register to vote, and these other key aspects. Meaning, this also applies when you're stateside, right? Like, let's say you're living in New York, but you
Mhm.
want to take up a Florida residency, you have to buy that state income tax. Well, you really got to live there for over 183 days and you got to have all your stuff there, right? If your whole entire family, kids, everything exists in New York City and you're kind of just counting those days, sometimes that could show up in court and be disallowed. So I like to say, don't make the move unless you're really committed to actually being a resident in wherever you're moving to.
I agree with that because I that was one of the things that when it was explained to me, they were like, oh, if your family lives in New York and you're in Florida, it it it, it it's likely not going to be allowed, or it'll be likely disallowed as well too. But now you said earlier on, you said that stocks, crypto, and maybe the sale of a company
Yep.
maybe are a little bit more favorable to the Puerto Rico laws. Any idea why those might be a little bit more favorable than maybe real estate?
Because the U.S. taxes real estate within the U.S. system. That's basically, I don't know if I'm explaining that right, but any buying and selling of real estate within the U.S. is taxed here on the soil.
That's awesome.
And so when you're residing in Puerto Rico,
Mhm.
buying and selling, a stock is not taxed the same as real estate is here.
Mhm.
You know what I mean?
So now, if I own a business or if I'm buying or selling crypto, would that apply for the 0% capital gains almost if
Yeah,
I'm buying and selling crypto? So if I'm basically a crypto investor, I can literally live in Puerto Rico, buy and sell whenever I want, and almost have like a 0% on any gain if I wanted to.
correct. And that's obviously why probably the last 4 years or so, we've seen insurgence of, people moving there with the Brock Pierce hitting the news. Seems like when Puerto Rico gets a couple of celebrities move there, then it kind of opens up.
Yeah,
Everyone
yeah.
hears about it and then they flock in, right?
That's crazy. Yeah, because that's kind of see. And it sounds like for the sale of a business. Now, does the business have to be in Puerto Rico in order for that to happen? Or can it be like I own Morales Group Enterprises, I moved to Puerto Rico, I'm a resident, I live there with my family, and then if I sell it, then it's 0% capital gains.
Correct. Yes.
Yeah.
Now, there could be some rules around depending on when you own certain assets, right? So let's say you move there today with that. Well, you'll need to get a price study based on what the valuation might be today, right? So let's say it's 10 million. So this way, when you go to sell it there, if you sell it for 50 million, then you know that the 10 million would be paid to the US federal rate and that 40 might be paid under your Puerto Rico tax decree rate
So it'd almost be like prorated once again, like, hey,
based on
look, the
residency
value of
days.
the business was this, but
Yeah,
then you grew it. So if you know that like you've already got a business with a large potential or something that's going to blow up and you want to almost like prepare for an exit, it wouldn't be a bad idea. At least that's what it sounds like. If it's worth 10 million, you know you can get it to 100 million and you want to prepare to an exit, maybe to live in Puerto Rico at that time as you scale the business and grow the business
there's
in other.
definitely people doing that and taking advantage of that. I've met people along the way that knew they were going to be selling their company in the next few years, and they have taken up residency to kind of execute that plan. Where when they probably moved there, they had gotten a certain price marked on that company that was maybe favorable in some sense, right? And then they, quickly grew that and exited. typically, besides spending that 51% or so of the year, or at least being a resident, you probably want to reside there for at least 3 years. That's what most people are saying. So if you're going to make that commitment, at least make that commitment for 3 years or more.
Now, this is kind of like a side question. What was life like in Puerto Rico? Like, because this is kind of what I'm thinking. I'm thinking that like a lot of the people that are moving out there that are doing it for tax savings think a little bit differently than your average person. And also like I'm imagining that like you might run into people that are pretty big, like celebrities or influencers or people that you can collaborate or network with. Did you come across any of those opportunities where you met like some people that have helped you in terms of like growing different businesses now, different relationships, and also like just life in general?
Well, let's hit on the business aspect, right? As I, when it came 2017, I was at a couple different parties, and I met other people investing in crypto, right, and technology, and that kind of, at first, I kind of dismissed it, as everyone does, right? And then after like 3 to 6 months, I was like, all right, I'll kind of dabble, right, and see what's happening, because it's interesting being real estate for a very long time and never really exposed to tech. I know where the world is shifting, right? We're going to technology, and so that opened up that start of investing in crypto and blockchain. So now we're actively involved for the last 5 years in that sector because of those relationships that we built there and met people along the way. So when you go there, there's a few different areas where more of the, we'll call it act decree people tend to live, right? And from that point is where you meet a lot of different people whenever you're out, because you just run into different people. You go to the meetups. I mean, everyone's out there having a drink. It's Puerto Rico. That's the problem, right? When you first show up there, you want to meet people. You might be heavy drinking. You're going to wonder why the productivity goes down a little bit on island time. You know what I mean?
To alcohol, the cause of and solution to all of life's problems.
And then what about like Act 60 and Act 22? Like I read some things about them, but I didn't really fully understand like Act 22. I know you kind of touched on it a little bit before the interview. Do you mind explaining to our viewers when they see that, like roughly what that means and how it kind of evolved a little bit?
Yeah. So when I moved there, 2014, Act was first established, I think 2012, and it was initially 22 and 20, where 22 was the capital gains and 20 was the corporate 4% tax rate. And what they've done over the last few years is they changed some of the fee structure annually. They changed some of the donations and some things they didn't have initially because of, I guess, people on the island wanting to see more come out of the participants coming. And then they relabeled it under Act 60. So it's just one decree now versus how they had the double. So now it's pretty much looked at as Act 60 in conversation.
Since so many Americans are moving out there, have prices inflated or have gone up? Like I heard this recently. I heard that like some of the locals don't like all these Americans moving out there because they've made almost everything a lot more expensive, especially the real estate. Is there any truth to that?
Total truth.
You serious?
Totally one of the biggest things that we probably dropped the ball on. When we were looking at real estate when we moved there, we established relationships with the banks, and we bought, I think, I've invested a partner probably 150 properties there in the last, whatever that is, 5, 6, 7 years. But some of the stuff we didn't invest in is where the tax decree people moved to, because it just didn't make sense from a cash flow standpoint to hold long term, right? But so when we were looking at Dorado initially, this is probably like 2015, maybe-ish, 2016, you get a property at like $1 million, and you're thinking, okay, this, it's to rent it out, this doesn't even make sense. Now they're probably trading at 4 million, right? So some of the biggest, I wouldn't call them regrets, but some of the lessons we learned is, definitely understand supply and demand. And when money comes in and there's only a few different pockets in Puerto Rico that they're usually looking to move into first, you should definitely buy up that inventory, because it's definitely done at least, call it a 3 to 8x, depending on the neighborhood.
It's funny. Like when I started investing in real estate, the main metric I would always look at was cash flow. And it wasn't until I missed out on some good opportunities, I saw certain neighborhoods appreciate more than others, when I was like, maybe there's something more. Like, yeah, cash flow is a good component, but this guy bought a property last year in a really good neighborhood, bought it at 2.3. This year sold it at 2.9, $600,000 gain in less than a year out here. which is kind of like what you're talking about,
Yeah.
where prices can appreciate like tremendously very fast. You can make a large chunk. Imagine having those properties at $4 million right now and like 100 of them. That would be like insane, right?
Yeah, I think no one quite saw it back then, and it was
Yeah.
hard. I mean, looking back, 20, what do they say? Hindsight's always 20/20, right? Isn't that,
Yeah. Mhm.
so you look back, you're like, if all these people are going to come for taxes, there's only a few places they want to live. Like, we should have been buying everything up. Like, how do we miss that? Besides the fact that I do remember underwriting some of them, and from like a rental standpoint, to hold it for 3 to 5, 7 years, it didn't really make sense. And the capex on some of the older places. And that's kind of why we passed initially, but hey, that's how you learn, right?
Do you guys still own some of those other properties? And how have those performed relative to basically the influx of people going out there?
So I think I'm down to I have maybe a few properties. I think we're down to less than a handful. Most stuff we
Awesome.
bought was pretty much a retrade or resell out to the market. We bought from the banks, kind of in bulk, and then we
Mhm.
resold it out, somewhere anywhere from, a month to a few year turnaround.
That's awesome, man. Good for
And
you.
because of all the act and all the money that's came into the system last few years, even just stateside, Puerto Rico is late to the recovery compared to the US, right? So
Yeah.
really, US was recovering somewhat around 2012 and on, where Puerto Rico was kind of more like 2015. So as we moved down there, we still had the opportunity for a few years, but now as all the money has come in and all the people are all looking for deals, because now with your tax decree, you're investing in Puerto Rico real estate, that's tax free because it's Puerto Rico real estate, right? So now everyone's looking for this, where to place capital that's tax advantage. And so the deals have kind of disappeared. The banks have now got smart where they trade a lot of the properties straight to retail. And, a lot of distressed opportunities now have disappeared, like I
Washed.
guess in the US.
So what you're saying is even that like had you bought, and this is nothing, had you bought the $1 million property, sold it for 4 million because it's in Puerto Rico, that $3 million gain would have all been tax free basically.
Correct.
Because
That's
now
right.
it's no longer under the US real estate tax law, it's under the Puerto Rico real estate tax law. So eventually, if you know how to find good deals or a good deal hunter, you can actually flip properties out there and not pay any capital gain taxes on it. If
Correct.
that's crazy. What about other tax havens? Like as you were doing your research as to move to Puerto Rico, were you considering any other places or anything else that kind of like caught your attention that would maybe help a viewer out there who's considering making a similar move? Maybe explore different options. And also, if you would do it all over again, is there anything that you would do differently as well too?
All right, well, let's hit the first one, and that is, it takes a long time to sometimes learn all this, but the general high level is, if you are a U.S. citizen, there's not really many opportunities unless you give up your citizenship. Meaning, back to the thing is, you have to become a resident, right? And so Puerto Rico is one of those caveats where it's allowing this to work. If they ever became a state, then it wouldn't work, right? And
Mhm.
so, because it's a territory, it has its own federal tax system, it works and allows you to keep your citizenship here in the US. And therefore, you go
Mhm.
back and forth freely whatsoever. If you want to go anywhere else around the world, which there is some jurisdictions that do have favorable tax rates now or 0% for businesses, then you would have to give up your citizenship. And most people don't want to do that, right?
Mhm.
Um, so that's probably the easiest way to say that, right? You can move around state to state to try to lower your tax rate from a state level. You can move to Puerto Rico to lower or eliminate your federal tax level. And last, I would say, we've also used is those self-directed retirement accounts to invest with. And that's probably, the next best thing.
Oh, so the self-directed retirement, the IRAs, basically,
Yeah.
the
Yeah.
self-directed IRA. So that's basically like if you didn't. So what you just basically said is that there are other tax havens in different parts of the world, but they required you to be a citizen, a resident, which means you'd have to give up your United States
Yeah.
residency. And Puerto Rico is one of the ones where you don't have to give it up because it's still part of the United States. So, but it allows you to take advantage, which is why people are moving to Puerto Rico, basically, versus some of the other places because they don't want to give up that residency as well, too.
Exactly. Right.
Is there like a seasoning period, like, or as long as I live there for the 183 days and meet the other requirements, like my family living there, my doctors, and some of the other things that obviously, like, if I actually live there, do I have to live there for a minimum of a year before I start benefiting from all these, or is there like a 2 to 3 year seasoning period or anything like that?
Most people say to try to move in before the end of the year, right? November,
Okay.
December, and then get your tax decree working out for the beginning start of the next year. That's,
Mm.
what's kind of been told, or at least advice been given here.
So that's why that way you take the full year basically, and you start the year
Yep.
completely fresh.
Correct. Without having prorations or any questionability. Yeah.
And then the other question that I had asked is if there was anything that you would have done differently, like, or anything that you kind of learned when you were out there already that maybe you didn't realize at the beginning.
I think we'll call it a life learning, right?
Yeah.
I think saving on taxes is very important when it comes to compounding wealth in life, right? And depending on what stage in life you're at, you're always willing to give up different things, right? And as you maybe get older and mature, there's maybe less things you're willing to give up, or some things you don't care about as much. And so I think, one, you need to figure out what stage in life are you at and what are you willing to kind of give up for those tax benefits, right?
Mm-hmm.
That's probably the first question. And then once you kind of figure that out, I would definitely make the move to, go there for a few months and see if it's a fit for you, depending
Yeah.
on if you're single, married, married with kids. It is a different area. It has different services. Things are slower. It's island time, right? So there's things that are slower, everything like that. But then there's also benefits of, the people being great, the warm weather, the beaches, and everything else that may come along with that. I probably wouldn't have really done anything different per se, like not having done the opportunity. But, I guess as you mature, you just figure out, like, sometimes I have 3 other buddies that also moved back stateside, and one moved right back to California, SoCal. He's like, look, my life and the things that I want in SoCal are much greater than saving the tax dollars. And I think, that's one of the things you got to kind of just figure out for yourself along the way. Cause I think, as all of us, we try to figure out how to optimize the best for money and maybe not always the best for life.
That's so awesome. I love that too, because it's a lot more than just the tax benefits associated with it. And I kind of, one of the negative or the drawbacks that I hear is that people are almost counting their days sometimes. They're like, oh, like I left this day, I came back this day, I left that day, I came back that day. And then what somebody said that made a lot of money, they're like, look, if you're spending that much time and energy counting your days, like, could you invest that time and energy instead of trying to save all this money in taxes, just saying, hey, look, I want to live where I want to live, I want to have the lifestyle that I want to have, and make more money to make up for whatever it is that you're receiving in tax benefits, basically.
Yeah. And I think one thing that I've never been able, and you might not be able to measure, is productivity, right? And so, like, if you got an office, whatever, in New York, 10, 20, 30 people, and you're used to a certain pace and those guys are a certain pace, and you go down to Puerto Rico, well, first of all, it's going to take you, a year, 2, 3 to just set everything up. Things move slower, set your business up, hire new people. And, your productivity may not be the same as that. And like you said, like, after 5 years, you might look back and be like, hey, if I pay taxes, would I have grown my company X% greater than have making that move, right? And we may never know that answer. And that's why I said it's most important to really understand what you would like for yourself and, your own lifestyle. Like, if you really just were like, I want to get out of where I'm at least for a few years anyway, I'm going to make the move and it makes sense. Great. If you're like, man, I got family, wife doesn't want to go anywhere,
Right.
and she's got all of her friends here, that might be more of a challenge for you.
Yeah. You know what? I love that. What I was going to say is, I want to do a future episode with you on either cryptocurrency or some of the things that you're doing at Robert Ventures for our viewers that don't know what Robert Venture is, and we can do a future episode on it. Do you mind just kind of sharing a little bit about what Robert Ventures is? We can do another episode on that. And then where people can find you as well, too, if they wanted to get connected. And I've truly enjoyed this conversation as well, too.
I appreciate it. So, I mean, currently I'm still doing some real estate deals. I have some stuff over at the beach. We're doing some new construction there on some lots that we own, and kind of we're trying to hit under a 500K price point because I just think there's no inventory there in this certain location. And so that's still going to sell. I think real estate's going to be a very geographic location to kind of determine on where the market is and where it's going next year or two.
Mm-hmm.
So we're actively, looking for acquisitions there. And as I mentioned, we move a lot of our portfolio into the blockchain and crypto sector, where we are investing directly into companies that are related to Web3 technology. And then we also have a liquid crypto portfolio. And that's how we're balancing out everything at this time. Over the next few months, we're going to be opening doors to raise capital at a fixed rate, at 8 and 10%. The ability to invest with your IRAs. We've done it in the past over the last 10 years with previous investors. So we have a track record there. Anyone who would like to reach out to us directly, they could fill out the form on the site at robertventures.com and talk with me if they're accredited. Hey, if you also want to get more insights into digital asset investing, you could go to joerobert.com, sign up there with your email address. We send out a weekly newsletter. It just highlights everything going on. Crypto is more than just kind of crypto, what you see on the, on the TV. It's more Web3, it's more blockchain, it's more building the next stack of technology, which will also impact all finances. We're going to at some point be trading security tokens around real estate and so forth. And, just the general ledger, will allow, us to make real estate transactions at a lot faster pace, where we don't have to worry about like all these title companies and all these intermediaries. And it's not going to happen overnight. This is a 10, 20-year play. So some people think, well, why is it not here yet? Well, tech takes a while.
This is the end of this episode. I just want to say thank you so much for taking the time to be on here. I do want to do an episode on crypto because for the longest time I have avoided crypto just because I haven't been able to understand it, but I love to be able to get a little bit more insight on that. For our viewers, this was another episode of the Residual Real Estate Agent Show. Today we had Joe Robert, real estate investor, and also crypto investor. And he educated us today on Puerto Rico tax benefits, Puerto Rico tax haven, and Puerto Rico taxes explained. So thank you so much. And I appreciate your time, Joe.
Thank you very much.